Perfect. So in this particular live stream, I did not only want to go over what we talked about in the previous episode, but I want to combine it with things we already went over as well, especially the resistance part, right? Because right here on the dollar, if we take a look at the weekly, and we see this weekly fair value gap right there being created. And I really would love for you to, even if you have the time, of course, study this, because this is such an extremely valuable topic right here, that the resistance determines how far we will retrace. So can we still continue lower? Yes, we can, but either it will be a big retracement like we're seeing right now to then continue lower, or we will just completely blow past it and we'll just continue higher like that. Now, tomorrow we have FOMC at 2 p.m. New York local time. So that will be very interesting to see what we will do right there. But again, that is quite important to understand, that a fair value gap in itself is not just the same as a fair value gap where we have a consolidation below it or above it, and then we sting into it. If there's a lot of resistance, there's a lot of momentum coming into that fair value gap, that is very suspicious that we might actually not hold that fair value gap. And if it does hold, then it's going to be always a big retracement, not just a sting into it, small sting into it to then continue lower. That's important for eventually when we want to work towards our entry confirmation, because then we know how much entry confirmation we are going to need as well. So let's see. I do see as well right here that we have a fair value gap, a fair value area right there. So this is what we talked about in the previous episode, those fair value areas, and when they are getting respected, when they are getting disrespected, and what we can expect essentially. So here, this 3 swing movement, the 1, 2, 3 right there, creates that mitigation block right there. Overlapping with a fair value gap, absolutely perfect. So at this moment in time, we can retrace back into that, and what we see is we have somewhat of a 2-candle rejection. Well, there's no real rejection to be found right there, but the ID was there that we might reject off of that fair value area, which currently does not seem like we are doing that. So at this moment in time, if this candle closed like that, my thought process would be, well, that definitely looks like we might actually want to continue higher right there towards the last line of defense instead. So that is how we combine again those fair value areas. Will of course depend on how we close with this candle still, and we also have FOMC statement coming up tomorrow. So since that is so extremely volatile, then this can still do whatever it wants to do. It can still even continue lower if it wants to do that. We will just monitor FOMC and what it wants to do right there as well. But that is important to take into account. And when we then take a look at EU, for example, we have very similar price action with the weekly right there, the weekly fair value gap. That again is just not super high probability to hold. And if it does want to hold, then like we're seeing right now, then this might be the low of the week, for example, to then continue higher. So a deeper retracement, disrespecting almost that weekly value to then continue higher right there. Same for GU, very similar price action as well right here. Weekly value gap, weekly order block even, which we are coming into. So in a sense, in this sense, where we have that weekly value gap, we have a lot of resistance coming into it, we would expect that weekly order block actually to be traded into right there, since there is a lot of momentum coming into it. So the retracement again is likely going to be a little bit deeper than normal, normally with just a normal fair value gap. For example, the EU fair value gap right there, this is exactly that daily value gap is when we would not expect a deep retracement into it, where we can just already continue low right there, because this is in itself already a consolidation as well. There's not a lot of momentum coming into it right there. That is extremely important, quite valuable as well to understand. And we see actually the fair value area right there, which we are also respecting right there. Beautiful. Beautiful to continue lower. Let's look at some interesting. I did not go over this in the video itself, but it might have been a good example as well. I went over it on the lower time frame, but on the higher time frame, we actually see the same thing on Russell right here. So on Russell, we are coming above this high right there. And when we are coming above that high, that creates overall a fair value area, right? So we understand this to be a fair value area. So if we want to continue higher, then ideally we want to run that high, because then we will have a fair value gap overlapping with the fair value area. If we want to offer fair value again, we can continue higher off of this fair value area. So what we are seeing currently is that this is showing great signs that this might be a sweep, where the fair value area the low right there, the last line of defense, actually becomes the target instead. So right here, we have a fair value gap right there, which we can come into, pushing lower off of that, ideally creating new fair value gaps, continuing lower as well. That could be very interesting. Only thing is that we are now running into a weekly order block and a weekly value gap. That weekly order block and that weekly value gap is sort of the last line where we can still continue higher from. So for this to not be a sweep right there, we would need to continue higher currently off of that order block and that weekly value gap. So what could be a great indication that we do not want to continue higher off of that? Well, let's look at the 2-candle rejection. We have the first rejection right there, first weekly candle is already somewhat rejecting. So right here, if we want to continue higher, then the next candle should ideally be an up candle. Well, right here, if we can still sweep that low to then continue higher, would not be too crazy. FOMC, etc. going on. So what I would love to see is if on the daily, since that's a swing low, if we can now do the same thing. If that can be a run on liquidity, or we can already close below that low, we can create fair value gaps below that low, then that shows signs that we might actually want to continue higher or lower, as well already. So that will be very interesting to watch right there. Now, for the rest, if you do have any questions, then please do feel free to let me know. And I'll go over a few pairs right here. Let's see. Let me include this as well. No worries. GBP Canadian dollar. All right, I want your take on GBP Canadian dollar short that I took this morning targeting the daily swing low. Also, since there was no resistance, I entered on the formation of the 15-minute value gap at 5:30. I would like to know what I did wrong. Let's see. Well, oftentimes, the entry itself is usually not the problem. And what I mean by that, the mistake is usually not made from the entry pattern. The mistake is oftentimes made from the higher time frame. And what I mean by that is if we take a look at the higher time frame right here and see if it's truly high probability for it to actually take, then we have the monthly swing high right there that we've been taking or that we've already seen potentially getting swept. We can still continue higher if we do want to continue higher as well. But then here it gets very interesting because on daily right there, we have a daily fair value gap, which we can continue higher from. But it does seem like we are potentially disrespecting that. So targeting the last line of defense. That was also my original idea right there. But then if we go into the 4-hour, on the 4-hour, we just see one big consolidation. We don't have a fair value gap pushing lower actually. So the higher time frame here is already a very low probability in my eyes. So then going into the 1-hour, let's see. Into the 1-hour, we have a 1-hour value gap actually sitting right there. And even that 1-hour value gap is it high probability? I would argue. Again, let's look at the previous price action that we had right there. The delivery just hasn't been nice. It's also why I've had it on a waiting list for now. And I was not interested in getting involved because even though we might deliver right there, it's just not the highest probability price action currently. Should have already delivered right there. Do I think there's something wrong with the 15-minute? And when we look at the 15-minute right here, I think the entry is good. As in, I don't think there's anything wrong with the entry here on the 15-minute. But I think the mistake was made potentially on the higher time frame instead, and not necessarily the 15-minute time frame, because the 15-minute right here, by just looking at the 15-minute, I would argue is a good trade. But the higher time frame, I would argue, that's not that interesting, if that makes sense. Let's see which questions are relevant for this session as well. Going over the crypto and the FEG a little bit later. First, going over this question. When we have multiple swing on the left and price disrespected all of them, from which swing we consider fair value area created? The last one closer to price? Yes, the last one closer to price. It's a good question, actually. The last one closer to price. That is the one. Yes, good question. Have to go to work now. Nice 10-minute eater. Better than nothing. Exactly, better than nothing, right? Better than nothing. See if we have some more questions before we move on as well. And it's very interesting to me right here because on NASDAQ, etc., we can see the same right now, right? We see again those fair value areas right there. Fair value area, which we're staying into, creates this new fair value area right there as well, which we can potentially continue lower off of, depending on what equities open wants to do, or if it already wants to continue lower off that fair value gap. And that will be an interesting thing because we have not gone over fair value gap just yet, just over the fair value areas right there. will be very interesting to see what we potentially want to do right there as well. ES, very similar, a little bit more messy, where we also see that fair value area right there. Very interesting price action right here. The fair value areas. This one is good. Let me see. Yes, perfect. That one is good. Yeah, that one is good. It's a good fair value area, Robert. Perfect. Let's see. All right, I'm watching the resistance video and struggling with understanding it a bit. I was wondering if you had the time for sure. Bitcoin yesterday was trapped between 2 4-hour value gaps. In videos, you said to wait for it to take out the candle low, the lower high of the rejection candles. I tried to look at it on the 1 hour time frame. How would you have tried to trade it, if at all? If you had. Apologies, I'm a few videos behind as I like to watch them a few times. No worries at all. No worries at all. I like that. I like that you like to watch it a couple of times. Perfect. So on the 4 hour, let's see. The way I would like to personally approach this is, let's see, I imagine it's this fair value gap and this one as well, right there, where indeed it's quite 50-50. So the way I like to approach this is it all stems from a probability standpoint. And what I mean by that is sometimes you will see me, as soon as the 2 candle rejection right there is taken out, you will already see me going into the 1 hour time frame right there to look for a new 1 hour value gap right there to continue higher off of that. But if we look at this from a probability standpoint, then the highest probability thing to do right here is simply wait on the same exact time frame as where the resistance is actually happening to wait for a new value gap higher. So either 4 hour value gap higher right there or a 4 hour value gap lower right there. Because in the meantime, we might also sweep those 2 candle rejections, which will leave behind 1 hour, 15-minute value gap, etc. But that doesn't make them super high probability. Now, if you combine this with, and you're not there yet, but that is the number 7, the basics video, what we've gone over yesterday, but you'll get there, no worries. You'll also see that makes a lot more sense than eventually. When you combine that with the understanding of a sweep versus run and the fair value area, then you can already see right here that you can trade this on the 1 hour already if you have a really good understanding of what a sweep versus a run on liquidity is. So both these 2 candle rejections right there, they get swept potentially. They have signs of being swept right there, already making those fair value gaps a little bit lower probability. So if they have a fair value gap exactly overlapping with those highs, those 2 candle rejections, then we can look to already continue higher. That answer makes a lot more sense once you do get to the next question as well. Hopefully the other one made as well sense, where the highest probability is to wait for the 4 hour value gap right there, either higher or lower, taking out those 2 candle rejections as well. Let's see. Yes, GPR Australian dollar, we'll go over that in a little bit as well. Let's see. Also on Australian dollar, New Zealand dollar, I was expecting a retracement into the daily fair value gap, but price took out the highs first before coming into the fair value gap. So is it still high probability? Let's see. Australian dollar, New Zealand dollar. What are we doing right here? Monthly. I have it on my long list. On the daily right there. Yeah, this is a really good question. Really good question. And we haven't gone over this just yet in the spring enrollment. But well, to introduce everyone to this as well, essentially that would be the context high. And the context high is simply set the first target. So when we reach a first target like this and then come back into a daily value gap, we are essentially sweeping that context high to then come back into the daily value gap. So me personally, I also looked at this morning and I do not necessarily like that. At least I do not like it in a sense where I would now want to look for 15-minute ST plus read to then simply have an entry pattern confirmation to then continue higher off that. That's what I don't like about it. So in a sense, it is lower probability for me. If we get a little bit more confirmation in the form of 1 hour, 4 hour value gap higher already, then it would still be interesting to me. Then I would still definitely take a look at it overall. If that makes sense. That's a good question. It's a good question. Can you please explain exactly the reason why we take the wick if overlapping with the value gap and the body if not? For sure. So the reason we take a wick when it's overlapping with a fair value gap, and the way I want you to see this is whenever we create a wick or an order block, it's this. It's the following. We have a move lower right there, creates the order block right there, mitigation block, break block, whatever it is. And me draw that a little bit more clearly. This move right there. Now, when we have a fair value gap overlapping, we will just have a one straight move higher right there, leaving behind a full mitigated order block, in a sense, this right there. So the high of the wick, in that case, will be the sensitive area. Now, to show you what I mean is, this will make more sense. If we don't have a wick overlapping, what actually happens right there? We have a move higher, move lower, creating the fair value area, and then we see the following. We already retrace back into a fair value area, potentially on the lower time frame. We already mitigated right there the high of that order block, the wick, with another wick right there that is seen on the right side of our chart. That is the reason why it's not overlapped with a fair value gap, because there's already a small retracement which is seen through the wick right there. So there's already been some mitigation right there. So the sensitive part will not be the high anymore. It will be afterwards the bodies of the candles right there to then continue higher off of that. So if we take a look at that in the chart, then let me find an example. So for example, here, the sensitive part would be, again, the open, just a wick, because that is where we have not been traded back into. We have not traded back into. But let's see if we have another example. Let's see. Do we have a good example here? Do we have one? This one, for example, right there. So what we're seeing essentially here on the lower time frame through that wick right there is that wick is essentially just a lower time for retracement already to then continue lower. So the exact same thing that happened right there. If we see this, we have this move lower. That creates the order block right there. Then we move lower again right there. And in that same movement, whilst we move lower, we already have a wick coming back into the open of that order block and then continue lower already. So it's already been mitigated. The open right there is not the sensitive area. So if we take a look at that on the 1 hour time frame, for example, then we see this. The fair value area on a lower time frame has already been traded back into, not leaving behind a fair value gap. So that is why it's not the sensitive area, because the orders right there already have been mitigated, if that makes sense. Can you explain more about flow trading? For sure. Let's dive into the more advanced section as well.